Euro, JPY, Euro USD. What do you see on Euro USD, Keith? So yeah, hope everybody having a great week. So what I'm doing right now, I have my eyes set on a few pairs. If you've been following me on Pip Talk, I had posted a trade idea on XAU USD. I saw something that I actually, let me see, XAU USD on gold. Check this out first, because I had this markup on the hour chart. Go to the hour chart real quick. 1 hour. So I had this markup on the hour chart. You all probably seen it inside my Pip Talk channel, where we have a crab pattern right here on the hour chart. And I actually didn't take this trade, so it was just for educational purposes, this right here. Because the reason why this is for educational purpose, because if I go up to the 4 hour chart, let's see, we have something called the Cypher pattern. You can see I've been in this trade ever since this deep entry point right here. So we catching hella pips right now on gold. Ever since it's about so my entry point is a deep point right here. Man, it's about 666 pips just off of that right there. And target one has not even made it. That's crazy, right? So we can see a shift in market price came out. I was starting to consolidate, and now we're starting to breach structures to left and create that momentum to the upside. This is why we did that trade here. It's a much bigger pattern overall for the market to continue to push up. So really just to check this out. I'm gonna show you what I see on Euro USD real quick, because a lot of people, they ask, how do I identify these patterns without using a scanner? And let me go to a naked chart real quick. So I'm gonna remove these indicators. Hold on, let me go to Euro USD first. Let me see something. Make sure we don't have any stragglers back here. Trying to figure out how to get into the session. Hello, hello, hello. Hey, what's up, everybody? Make sure you join the Zoom link. Copy. So yeah, I'm gonna show you guys exactly how I identify these harmonic patterns without necessarily looking at the scanner. And guys, remember, the scanner is a tool that you all should be utilizing for confirmations and whatnot. Don't necessarily rely on it. It's just a tool that's going to help you, just like any other indicator out there in the market. It's a tool that's going to help you guys understand. Let me stop this and because it's slowing me down. And let's go back to the charts. All right, cool. So just like you see all these the indicators on my chart is basically just a tool that's going to help guide you in the markets, giving you a sense of direction. So that's what harmonics do. Go to Euro USD real quick. And on Euro USD, I just want to show you guys how I'm able to see these different harmonic patterns without necessarily having to use the scanner and everything. I can just see it with my naked eye. So let me go ahead and remove all indicators. And looking at this market right here, we can see that we have a push to the upside, right? Harmonic patterns, the foundation is simply support and resistance, okay? And you can see what we have up here is a level of resistance up here. RES for resistance. And followed by an impulse leg. This is what we all should be looking for in the markets to start identifying these harmonic patterns, which is an impulse leg, okay? To a level of support, SUP for support. Now, again, when you're looking at the market, trying to identify, what's going to tell you what you should be looking for is the pullback in the market based off of this move right here to the downside. And the same exact thing based on this move to the upside. So I'm glad we have this right here. We actually have two harmonic patterns developing right here in front of our eyes. So based on an impulse leg, over here will be the inverse of what we see to the right. We have a level of support down here and a level of resistance up here. RES again for resistance. So check this out. So when I'm looking at this market push to the upside and create this level of resistance, this right here will be considered my start point right here, which will be my X leg. And let me change this color real quick to turn it red. This will be my X leg. Follow the market all the way up to this level of resistance. This will be my A leg. Now what I'm going to do is jump over here to this level of support, to this level of resistance and to this level of support over here. Because what happens is we have an impulse leg to the upside and a pullback, and I'm going to get into this right here in a minute. And then we have an impulse leg to the downside and a pullback. So based off of this right here, this is the inverse of this over here. I have my X at the bottom, I have my A at the top. The X is always my start point. So now looking at this over here, my X will be at the top because of this level of resistance, and this level of support will be my A leg. Does that make any sense to everybody right now? Before I continue to go further. Shanita, what's up? Alex, all right, perfect. It's starting to make sense. So again, it's all based off of support and resistance. And I'm going to erase everything real quick. And I'm recording this also, so I'll drop this inside the Pip Talk channel. So guys, if you don't know what my Pip Talk channel is, make sure you subscribe up here. I'll go ahead on and post it again one more time for everybody. Like I said, I'll be able to be more hands-on with each and every one of you. So yeah, you're welcome, Denise. So yeah, check this out. Again, based off again, like I told you guys, the market will come out of a period of consolidation and make a move to the upside or downside. In this case, it's the downside, right? Now, this right here, I could have took this as my X leg over here, and this is my A leg over here. I could have done that also. But the market, the retracement for the B leg was a little bit too high. So that cancels everything out because that pullback was a little bit too high. Unless the market would have pulled back, because based off of this level up here, this level of retracement right here, let me see what this is. Yeah, I think that'll still be invalid. Let me take a fib and fib it out from this high all the way down to this low and see what we get. Because the 88.6 touch would make this a deep crab pattern, but this B leg will have to pull back a little bit further in order for that to be valid. But I don't want to get into that right now. I just want to get into helping you guys identify these moves in the market. So I have my X leg right here. I have my A leg right here. Level of support, level of resistance. I have an X leg right here. I have an A leg right here. Level of resistance, level of support. That's where everything starts, all right? So now looking at this right here, this section right here, what I want to do, I want to zoom into this real quick, because what I see, again, a nice impulse leg to the downside. Well, I actually see two things right here, because I'm actually on a 4-hour chart. Wow. So yeah, what I see right here, a nice impulse leg to the downside, and let me go down to a lower time frame. I got ahead of myself. Hold on. All right, here we go. So what I see is a nice impulse leg to the downside, okay? This impulse leg, again, level of resistance, level of support. Consolidation, boom, market drop. What I want to do is take my fib and I want to fib out this X leg to this A leg and just see where the market pulls back to. So this will be my X. Follow the market down, follow the market down. This is my A leg. And I just want to see where the market brings us to, okay? Take my fib, and I'm just going to fib out from X to A. And I see I have a 61.8 touch right here, okay? This B leg right here is always going to tell you, this pullback right here is always going to tell you what you should be looking for in the market. Yeah, this is a pullback right here, but this pullback isn't strong enough, and plus it continued to push to the downside. So I would take this entire leg right here as a whole. That entire leg as a whole, okay? So now I got my X leg, I have my A leg. This is how I do all my markups. And now I have my B leg. Who can tell me what this level right here is presenting to us right now, what we should be looking for and what we should only be looking for? Who can tell me? See if you all been paying attention. Gartley pattern. All right, nice. Exactly. Give me 2 seconds. Yeah, we are looking for a Gartley pattern, a deeper retracement. She said a deeper retracement. What do you mean by deeper retracement? Give me like 2 seconds. Somebody said deeper retracement. Well, I'm looking for that 61.8 right there. Let's see what they say. So I can mark this up when we finish. Yeah, you can mark it up. Yeah. So looking at this, I have I'm looking for a Gartley pattern because I got that touch on the 61.8 level right here. So that's all I should be looking for, okay? Is that 61.8 touch. Now, that's not what all I should be looking for. Because I know now that I have a 61.8 touch, all I should be looking for is the Gartley pattern. Nothing else, all right? Nikita said, why? Because it hit this right here, hit the 61.8 from the measurement of my Fibonacci retracement from X all the way down to A. This pullback came back and hit the 61.8. Now, if you look right here, price did hit the 50% right here, okay? As soon as it hit that 50% right here, I'm looking for a back pattern, all right? That's what I'll be looking for. So originally I had this as my B leg, but price consolidated and made one more push to the upside and then it pulled back. So now things change a little bit. So you have to be willing to be able to adjust to the market. Don't try to predict the market, just try to react to it. So what we're doing right now is we have XAB identified. So in order for me to find my C point, I now have to take my fib from my A point, take it from A to B and measure out this retracement right here. So this is the push to give me my B leg. This is the retracement. All this right here is retracement based off of my AB leg, okay? So now that I have my B leg identified, now it's time to find a C leg. For my C leg, and this is what a Gartley pattern now. So for my C leg, I take my field from A all the way up to B, and I draw all my stuff wick to wick. And I'm looking for a minimum touch of a 61.8 level. That C leg looks deep. Yeah, the C leg can be deep as it wants as long as the C leg doesn't break past the A leg. The C leg can come all the way down because I'm looking for a minimum 61.8 touch. We have that touch right here. We have that touch right here first, and then boom, it proceeded to push down to the 78.6, and it pushed all the way down to the 88.6. It can come all the way down and touch the 100% as long as price doesn't close below my A leg. This is still valid. Soon as price proceed below my A leg for this specific harmonic pattern, the Gartley pattern, soon as price closes below my A leg, for my as soon as the C leg closes below my A leg, this right here marks that pattern invalid. So now what we have is we have our 61.8 minimum touch. We have it right here. Price came down at the 61.8. This is our C leg. So what I want to do now is, let me redraw my C leg because I gotta take my fibs from there. So what I want to do now is take my fib from, I'm sorry, let me go ahead and identify this. This is my C leg. So what I want to do right now is simply follow the market. Now, by this time, you all should know. Well, I'm not gonna say you all should know because it's a lot of new people on here. So that means when it hits. So what does it mean when it hit the 61.8? Follow. Just stay with me on Nakia. Just follow me, okay? So right now, we all should know what we should be looking for in the market. Well, let me take that back. I know what I should be looking for in the market, but you all don't. So what I'm going to do now is take my fib from, because we're still putting the pieces together. When you trade in harmonics, it's not about just jumping in trades just to jump in, okay? You have a strategic set of rules that you must abide by. It's like playing a sport, playing basketball, right? I have a set of rules that I must abide by to stay, relevant to the game. Same thing with trading harmonics. You got a set of rules that you must follow by to stay relevant to, the trading plan. So now what I want to do is take my fib from my X leg all the way down to my A leg. And I'm looking for a 78.6. I'm looking for a 78, and I already have a line right here, so let me delete that line real quick. I'm looking for a 78.6, and I have this zone right here also. I'm looking for a 78.6 completion. Let me delete this also. Now, what I'm looking for is price to push up to the 78.6 level. The question is, will it push up there? I don't know. I can't predict the market. You can't predict the market. You can only take what the market gives you. So this is all about being patient right now because you have these points identified. So right now, I'm just being patient and seeing if I'm going to get this completion up here at the 78.6 level. Now, what I also want to do, I want to take another fib because I'm looking for two levels. I'm going to take my fib from my, matter of fact, let me take my Fibonacci Extension tool. You can use either one, the fib retracement, taking it from B to A, or you can use the Fibonacci Extension, taking it from A to B, all the way back down to A. And I'm looking for the 1272 level also. Now I have the 1272 level and the 78.6 level lined up identically. Guess what? This right here is if price pushes up to the zone, this would be a high probability trade right here, and I'll enter without no type of hesitation. When you have these two Fibonacci levels, confluent with each other, then that right there is a high probability, trade opportunity when it comes to, trading harmonics. So let me repeat that one more time. So what I'm going to do right now is take my fib. I'm going to take my fib to identify my D leg, and this is where we enter the market, okay? At the D point. I'm going to take my, let me see if I got questions. Yeah, C should, 618. What does it mean when it hits a trading opportunity? When it hits that levels, we're both connected. Can it also push up to the 1414? I'm gonna get into that also. So to identify my D point where we're gonna be looking to enter the market for a selling opportunity, take my fib from X all the way down to A. Let me just extend this out just a little bit. X all the way down to A. I take my fibs from wick to wick. And like I said, you can either take the Fibonacci Extension tool, which is right here. Well, it's over here. I just got it saved up here for me. You can go into here and grab your Fibonacci retracement and your trend-based fib extension. So let me just grab that extension, and I'm going to take it from A to B, all the way back down to A, and it lines up with that 1272 level. The 786 lines up with the 1272 level, and this is what this harmonic pattern looks like. So I'm gonna come over here and grab my pattern, take it from X to A to B, B to C. C completes up here at that 1272 level, all the way up to that 78.6 level. And your stops will go above your X leg. Stops will go right here at this 113 level right here. This is where my stops will go. Put SL for stop loss. So again, I don't know if this is going to continue to drop down to the downside. I have no idea. I don't even know if it's going to push up to the upside. But when you trade harmonics, yeah, I'm one step ahead of the market because I have a sense of idea of what I'm looking for and where I would love to enter this trade. That's why, and how many, this is about 115 pips away from our entry order as well. So again, it's all about being patient. Waiting these trading opportunities out. You might take low number of trades, but your accuracy is going to be on point when you start trading. So when it hits that level, I enter the trade. I wait till it reaches. Yeah, just wait till it reaches that level. 1.15810. That's if it reaches that level. When using a harmonic scanner on IML, what times do you know when to trade or when to look for a trade? I currently work nights, so it's convenient for me to trade during London. Like right now, think about this. Think about this. I have this harmonic pattern drawn out right now, okay? I can go ahead and set a pending order right here at this price, 1.15810, and just go on about my day and don't even have to worry about looking at my charts or anything like that. So I can already have my order set up and just go live my life. That's another thing about trading harmonics, that you have an advantage. You don't have to sit there in front of the computer. Like it took me literally 5 minutes to spot this. I was just going through my charts and boom, I spotted it. So again, but once you get to that level, okay, so you enter for a sell at 76, you don't trade. Now, I'm not going to trade up to the 78.6 because, like I say, I don't know if it's going to continue to drop down. I don't know if it's going to push up. I just know that these are the levels that match up for this harmonic pattern, and I'm just being patient. And if it hits this level, perfect. If it continues to drop, perfect. I just move on to the next pattern. So are you looking for a sell? Yeah, I'm looking for a sell opportunity. This will be a bearish Gartley right here. Another thing, looking at this also, I see that I have Olga, what's up? I see that I have ain't no problem, Frank. I see that I have on I think the time frame up, Let me go ahead and erase everything, clear all drawing tools. I think on the time frame up, let's see, I think we possibly have another harmonic pattern that could possibly develop as well. We got this, measure out this move right here from here to here. We have about a 38.2 touch, almost down to the 50%. This is another harmonic pattern that I'm looking at right now. So I'm not gonna go through. I'm just trying to mark up the levels and see the possibilities. We got a 1.13 touch right here. So now we're looking for a potential shark pattern. That completion for that shark pattern. And like I said, I'm not gonna go through the shark pattern real quick. I'm just marking this up real quick. Price could push all the way down to this level right here, this 88.6 right here, all the way down to through the 1.13 level. So this pattern will look something like this: X to A to B, B to C, C all the way down here to either the 88.6, which is complete right here, the 113 level, which completes right here, or it could push down to the 1618 level, which completes down here. So that's just another pattern that happens as well. So now that we went over this right here and what I see on euro dollar, and again, I think we have also possibility of the same as that move right here that you see, the same as that move, but right here. Let me see something. Remove that. Let me put a trend line right here and see. Let me see if this A leg right here wasn't penetrated. So, okay, cool. So let's see. So I'm going to take my field now from, let me take it from this high all the way down and see what we get. Did we get a 50% touch? Barely. Let's see if I try this level right here. All right, cool. So check this out. So the same as that thing right here. Again, this is just a I don't know, my opinion. My opinion, okay. My trade analysis. Again, same thing that we have right here. Same thing that we have right here. We have it right here also. Okay. So check this out. So also when you trade in this as well, whenever price hits the 50% or the 38.2, you could be looking for a potential Cypher pattern, because remember, a Cypher pattern is valid as long as price doesn't break above and close the 61.8. The Cypher pattern is valid until it closes above the 61.8. It can come up and wick it as long as it doesn't close above. This will be valid. This will be valid. This will be invalid. And this is a check. Okay. So right now, looking at this move right here, this will be my X leg. This will be my A leg. And I have two options now. Let me see what everybody's saying. TP will be where. I'm gonna go over TPs in a little bit. It's hard to find a type of pattern. I spent all day looking. So when you're looking for the when you trying to train your eye to see harmonic patterns, don't try to look at what's happening now. Go back into the history and scan through the markets and try to find them. That's the easiest way. Cypher coming up to the 61.8. Yeah, the Cypher can go all the way up to the 61.8 without closing above it. So looking at this right here, I got my X leg. I have my X leg, I have my A leg, I have my B leg. So now I'm looking for possibly a Cypher. We'll put SYP or a BAT. These are my two options right now based off of what I see right now in the market. Okay. Cypher, BAT. All right, these are the two levels. So watch this. So if I take my fib again and measure out, and this right here, the reason why it's still a valid BAT pattern is because when I take my fib, X, A, B. Come on, yo, don't do this to me. X, A, B. So the reason why it's still a valid Cypher pattern, because when I take my fib from my A leg to my B leg, I'm looking for a minimum of a 50% retracement without price breaking below the A leg. That's the only reason why it's still a valid Cypher. Hold on. Yeah, that's why that's why it's still a valid BAT pattern. That's why both options are still valid, because my C leg did come and give me a minimum 50% touch right here. Give me that 50% touch right here. But the C leg never broke below my A leg, right? That level held. See what I mean by I can come all the way down as low as the A leg and wick it? This is a good example of that. I'm looking for a 50%. And this is why you don't jump in the trade early. I know somebody said, well, why don't I trade it up to the D point? Because of this right here. Yeah, I'm looking for a minimum 50% touch right here. That doesn't mean because it hit the 50% touch it's going to automatically shoot up and give me my completion. No, not at all. This is why you have to be patient and let the trade come to you. So that's what we're going to do. We're going to be patient, let the trade come to us. We have 1 point XA, we have XABC identified. So these are my two options now. You ready? My two options are price could go all the way up to the 88.6 and complete for a sell opportunity. Take my fill from X to A. And price can come all the way up here to this 88.6. So it'll look like this. X to A to B, B to C. And then complete at the 88.6. This will be my BAT pattern. These are my options, okay? Or if I take my fib, let me go ahead and delete that, remove it. If I take my fib from my A leg all the way back up to my X leg, price could continue to push down through this extension zone down here for the Cypher and give me a minimum touch of that 1272, which I would need for that Cypher pattern to complete. So price could play around and boom, drop down to this 1272 all the way down to the 1414 for the Cypher pattern to be valid. If price does push down to the 1414, the max extension that we need, it can wick it. The candle just can't close below it. So this will be invalid if that were to happen. This will be perfect right here. The wick and the candle closed above it. So if it does do that, then those are my two options. So now what I want to do is be patient and wait for the market to show me its cards. I want to wait and see what's going to happen, what the market is going to do, because we can have something like this right here. Where's that 88.6? Let me see, X to A. Hold on, let me do this real quick. Take my field from A back up to X for that Cypher pattern. I'm looking for that 1272 touch. So, and then let me take my field from the completion of this, where I'm gonna say complete at the 1272 level, because I don't know yet. I'm looking for that 78.6 completion. So it'll look like this for the Cypher pattern. X to A to B, B to C. C will complete at that 1272 level. So it's just B to C. C all the way to D at this 78.6 level right here. Let me just extend that out some. That's what that would look like. And then for the bat pattern, it would look something like this. X to A to B. B to C. C complete at the 88.6, which is right here. So these are the two options. Let me change the color of this to yellow. So these would be the two options right here. Either way, is if price push up to this area, I'll still be looking for a selling opportunity as long as these levels respect each other. So what I want to do right now, what tool is being used? Sorry, I got on late. The tool that's being used are your eyes, the Fibonacci, which is right here, you can find in this section, Fibonacci retracement. And the last tool is the Harmonic Pattern, the Cypher pattern, the XAB CD pattern. Those are the tools that's being used. So I'll go ahead and delete this. And don't get discouraged at all if you can't see this with your eyes right away. Your eyes, you're welcome. Your eyes are your #1 tool when it comes to trading harmonic patterns. Being able to spot them out, spot these patterns out. So let's look at a trade that we're currently in, USD CAD. How many people are in USD CAD right now for sale? I'm not. All right, cool, no problem. So yeah, USD CAD, we got in at this D entry point right here. Currently up about currently up 40 pips, and looking for this to push all the way down to this target 1 right here, which is about 125 pips, and then target 2 will proceed down to about 200 pips. So we're looking for that push to the downside based off this harmonic pattern right here. It seems like this level right here is holding, and it's all about being patient and waiting for it to set up. So let's see, got a question. Sell now? Nah, I wouldn't. Don't sell now. If you're in the trade, go ahead on the move to break even. Move your stop loss to break even. I know we have news event tomorrow, which is Wednesday, CAD news. So USD CAD is going to be affected. Maybe we get that push to the downside for target 1 to at least be hit. And if it hits target 1, that would be dope. So I can draw it up and set pending orders. Now I posted this in my group. I mean, well, in the Pip Talk channel like last week. I'll show you right now. So take a look at it right now. See how it looks right now. So let's go over here to Pip Talk. Let me scroll up. I'm actually Da Vinci Code on Pip Talk. So if you ever see Da Vinci Code, that's me. So this is the trade right here that I had. This is, well, not that one. This one right here. See, this is the same as that trade, USD CAD. This is the before picture. You can see how price came up and hit that zone. This push right here. So last week, who remember the news that happened on USD CAD last week? Someone asked, do I trade news or whatever like that? So last week, this push right here, that push right there, I think that's about 100 pip push to the upside. All it did was complete my harmonic pattern. And I have my sell limits up here and to grab my orders. And right now we're up like 40 pips right now on this trade. So I posted this right here. Hey, what's up, everyone? So we got a completion point on USD CAD for a bearish Cypher, and orders should have triggered if you enter USD CAD for a sell. Here is the markup. So I posted this on October 19th, and we should be looking for a potential drop based off of USD CAD. I also posted this right here. This is what I'm saying on Nzdusd. In blue, we have a bullish Gartley pattern, and in black, we have a bearish shark pattern. So let's go over to Nzdusd real quick. What time is best to check the harmonic scanner to catch a trade? I'm in Texas, and every time I look, the trade already started, and I joined. Probably, get up. London session, New York session, those are the best times to look for potential trade setups, trade ideas. Let me see, Nzdusd and Nzdusd. This is another trade that I sent out as well. You can see how, let me go down to a lower time frame. This right here hit right to the T. Like that gap open for the Sunday opening of the market gapped up, hit our orders, and then boom, drop. How many pips is this? That's about 75 pips right there. So if I go back here to Pip Talk, take a good look at this, okay? I think the market was currently right here before when I drew it up. So let's see. So yeah, you can see how the market was just sitting right there. Let me zoom this on. You can see how the market was just sitting right here, and I had this drawn out and had my orders up here. Price pushed all the way up, grab my orders, and then drop. So you can see right here, we're currently sitting like right here in the zone. Right here in the zone, price pushed all the way up, grabbed our orders, and then boom, proceeded to drop. So again, you might not, and I think I was in this trade for a couple, I think I waited on this trade for like this happened on, I think price is down here on Friday. Yeah, this is on a Friday, price pushed up and then came down, and then the market opened up on Sunday, boom, pushed up, grabbed the orders and dropped. So I waited for about a couple of days for that to happen. No big deal, right? And then on top of that, I had this Gartley pattern, pending order sitting right here on this Gartley pattern to develop the same as that pattern that we saw, that I just drew up for you guys on, I think that was Euro USD, if I'm not mistaken, for the Gartley pattern. No, I think that was a bat pattern. What was the Gartley pattern? Oh, GBP USD was the Gartley pattern. So the same thing that I saw right there, it was also right here. But I didn't enter this trade because price didn't push down into this zone and complete my move. So I actually missed this move. But I saw this right here developing, and I caught this move. Why? Because like I told you, everything starts with a level of support, level of resistance. So if you can start identifying your level of support and resistance, that'll be your anchor legs when it comes to trading harmonics. And guess what? This is my X leg, my A leg. Now this is my X leg up here for the pattern in black. My X leg, my A leg, B, C, D. So if you can identify the levels of support and resistance when you trading, that's your foundation of harmonic patterns, honestly. Coming out of a period of consolidation, marking consolidator right here, greater level of support, boom, push to the upside. Right here. Gave me that pullback. Now I'm looking for a Gartley pattern because it hit the 61.8. Let's reset this. Market consolidated right here. Boom, drop to the downside. Now this is my level of resistance for the pattern in black. And now this is my X leg. Follow the market. A leg, B leg, C leg, D. So I could have, that would have been pretty dope catching that D leg. So if I was to catch the C leg to the upside, I know somebody asked me about that earlier. How come you don't just take the C to the upside and wait for the completion of D? Well, this right here is obviously something that I would have to do because I entered at the D point right here, and that D point just so happened to be my C leg. So I would catch that move to the upside, take profit at the completion of this point, and boom, sell it to the downside. So sometimes when you are trading harmonics, they happen like back to back, and you just have to be in sync with the market. From now on, I'm marking up my charts just like yours from your Pip Talk channel. Nice, appreciate that. You said to focus on one pattern at first and master that one before going further. There are so many patterns and options. What's the most used pattern, or which would you recommend to focus on? Well, I say the pattern that I use the most is the Cypher pattern. That's the pattern that I use the most, and that pattern is not. I use a Cypher pattern, and I traded that pattern for a year straight, and I added the Gartley pattern and the bat pattern. So I say, do the Gartley pattern. Focus on trying to identify the Gartley pattern. That's a pattern that's mostly traded as well, and you can do that. Just study that one specific pattern. And again, like I told you guys, if you are studying patterns, trying to identify them, don't try to look at them in hindsight. Go back in history, look at the chart. What's the best time frame in your opinion? There is no perfect time frame. I use them all. If I'm on a higher time frame, then I'm looking for a swing trade. Like I might be in that trade for a couple days. I lower my lot size. Like USD CAD. I'll show you anyway. Do you twin trade these trades? Twin trade, you mean open up two positions? Yeah, I'll probably open up two positions, let one go to target one, and my second one go to target two. Sometimes if the trade, I'm like in a little bit drawdown, I enter at target one, and then I have my other position, I enter at another level of resistance at the top if it continues to push up a little bit higher, and I catch both moves to the downside. Cypher is not on a harmonic scan. Nope, not at all. How do you spell that? CYPHER website? No, there's no website. So let me see. This right here, USD CAD. So I've been in USD CAD for a minute, USD CAD. So I've been in USD CAD ever since the 18th. And what's today, the 23rd? So 19, 20, 21, 2, 3. That's like 5 days right there. Price pushed up, gave me my entry point, pulled back, pushed up again, level held, pushed up one more time, level held, boom. So it dropped. So I'm looking forward to take out this low right here and continue to push to the downside. So hopefully tomorrow we get that. Hopefully tomorrow the market don't do nothing stupid, like come back up and retest and then drop. I just hope that we just get a straight drop to the downside tomorrow. That's what we all want, right? The Gartley. Yeah, the Gartley. Not Tartley, but Gartley. My bad. I got to copy the Cypher pattern off profit.com. Okay, cool. What I can do, what I'll do is I'll drop a video. I'll make a video, bro. So that way we can I can, talk you guys through how to identify the Cypher pattern. and then I'll post it in Pip Talk. How about we do that? That way I can get, you know, more details, and, you know, you all ask me questions and stuff rather than going to a website and trying to figure it out on your own. It's gonna make things a little bit complicated. I think you definitely need somebody that can help you spot it out. So for example, like I told you all, don't try to look for these patterns like in hindsight. All right, look for, what you want to do is go back into history. Let me go to a 5-minute chart, and let's see if I can identify a Cypher pattern. I don't know, we might have push here. I think this right here is a little bit too high. Let's see. Yeah, this would have been invalid because price closed above the 1414. If I can get this right here too. All right, right there. And right here. So when I mean by a palette is invalid, when I mean a pattern is invalid, this is what I mean right here. So we got everything that lined up perfectly, okay? We got the, let me see what y'all talking about real quick. Sounds good, that's awesome. If we go back in history, how would that help us with an entry point? Easy, I'll show you right now. So check this out. So looking at this will be my X leg. Follow the market. This is my A leg. So follow the market from your X leg. Don't look at the X leg and then try to jump all the way over here to the B leg. No, follow the market. Follow the market. Follow the market. This is my B leg. Price came down and gave me my valid touch. Follow the market. Now this is why this right here is the 1414. This is the max low. The minimum that I'm looking for is a 1272 touch. All right, that's the minimum. The max I'm looking for is the 1414 for the Cypher pattern. Let me put Cypher right here. CYP. I got handwriting like a 3-year-old. Don't laugh at me. So the 1.414 is the max. Remember what I told you. If the candle closes above it, it's invalid. If it comes up and wicked and closes below, it is valid. It's still good. What we have here, we got these candles right here that closed above it, so this pattern is now invalid. All right, that's what I mean by invalid patterns. You have to follow the rules. Now, if this level would have held right here and the candles didn't go above it, then yeah, that would have been perfect. Okay. Let me see something, because let me go to a 15-minute chart real quick and look at that same exact pattern. All right, cool. Well, see, that's tricky, huh? Because you go to a 15-minute chart now, this is just wicks. All right, so let me use this example right here. All right, so I'm gonna take you guys through step 1. So looking at this market, I see I have level of support, SUP. Okay, this is now my X leg. Go ahead and identify that as my X leg. I want to follow the market. Boom. This is my A leg now. But what I want to do is I want to fib out this level of resistance. Okay. Put RES. Put R for resistance. I want to fib out that level of resistance. Down 15 minutes, they didn't close, but on an hour it shows like crazy. If we go back in, or is it just you recognizing them? No, I'm gonna show you right now. So X to A, I'm gonna take my fib and I'm gonna fib out this level. Let me erase this so I can see my fibs. Like I said, I like to get surgical on my charts. Everything has to line up. So I take my fib from X all the way up here to this level of A. I'm looking for a minimum 38.2 touch. That's it. We have that 38.2 touch right here. As long as price doesn't close below the 61.8, we're perfectly fine. So now I have my B leg. That looks like a B. Yeah, that's a B. So what I want to do now is take my fib from, I want to take my fib from my A leg all the way back down to my X leg. I'm using these extensions up here. I can use my fib extensions. I can take it from X to A, all the way back down to X, and the levels still line up. They're not lined up because I don't have it perfectly set up, but they still line up the same. You can use either or. So I'm just gonna use my fib extensions, and you can see how price, if I put a trend line at this 1414 level, how price respected it. It pushed up and rejected. So this is still valid. All I need is a minimum touch of a 1272. That's it. That's all I need is that 1272 touch. The max it can go to is the 1414. So now what I'm looking for right now is I have my X leg, XA, D leg right here, and my C leg up here. So what I'm looking for now, I'm gonna take my fib from my X to my C. I'm gonna take my fib from my X leg all the way up to my C leg. X to C, and I'm looking to enter at the 78.6 level. And this is just random. I just scroll through my charts and you can see how easy my eyes pick up on these patterns. So from X to C, follow the market down. I'm looking at this 78.6 right here. This is the first time price hit the 78.6. So price hit the 78.6. This is my D point now. So this is what it looks like. X to A to B, B to C, C to D. And I would have entered here. So I put my D point right here. That's because that's why I would have entered right off that 78.6. It's always a 78.6, always. All right, so now how do I find my target? Simple. I take my fib from C. Let me zoom out some. Let me zoom in some, I'm sorry. I take my fib from my C leg all the way to my completion, not where I entered. This is where I entered, but I take it to the completion of D. My first target is a 38.2 level. We got that 38.2 hit right here. So, and my second target would have been a 61.8. Price didn't, I don't think price went up and hit the 61.8 before stopping us out. So we would have achieved target one. Yeah, I don't think price. Oh snap! This happened not too long ago. I thought I scrolled back in history or something, but this happened like not too long ago. So we would have gained about, from my entry point, we would have gained about scalp. And again, like I said, you know, people keep asking, you know, do I do this on long term, short term? If this is on a 15-minute chart, you look to scalp the market. You could have got 10 pips off of target one, and target two would have gave you about 17 pips. Target two would have gave you 17 pips. So you can use this method to scalp, and you can use this method to swing trade. Does that make sense to everybody? let's see. That's what I mean. It's valid in the 15, but not in the hour. 1 for level. No, not really. You don't understand. I mean, it'll come to you. Like, trust me. You stick to the course. You know, put the time into learning. Like I said, I'm gonna make a video. I think I'm gonna make a video on all harmonic patterns. How do you know where to get in at current price? Because from X to A, I'm looking for 38.2. I'm always entering at the D point, so I don't even know. Like right now. So looking at the market right here, okay. I see I have my level of support. I have this level of resistance. Price pull back. I'm going to grab my Fibonacci tool. And I'm going to fib out this level of support to this level of resistance and see what this level right here gives me. I just need a minimum 38.2 to a 61.8. That's it. All right. Price then gave that to me. I'm not entering the market yet. I'm just gathering evidence. Price gave it to me. I know now that I'm looking for a potential Cypher pattern or a back pattern. Price then pushed up to this level. I know that from my, if I take my fib from A to X, I know that price can't close above the 1414 level. I need a minimum touch of the 1272 without price closing above the 1414. That's exactly what we have. Okay. I'm not entering the trade yet. I'm looking for the D. All right. Price then. Now that I have my X, A, B, C level, I'm going to take my fill from X to C. I'm taking my fill from X to C, and I'm looking for the D, which is the 78.6. I know that the 78.6 is always my entry point for this specific pattern. Always. There's no other thing, no way up, no way around it. It's the 78.6 all the time. It's like math. You can't change math. No matter what you do, 2 + 2 is always going to be 4. Always. And look what we have, the 78.6 right here. I have my pending order set right there. I know what my target 1 should be, the 38.2, and my target 2 should be the 61.8. That's how you know when to enter the trade. It's very, very simple. Trust me. Someone said, I thought going back in history meant we can take a current real-time trade. Nah, I mean, you can, but you need data, obviously, to, I'm not obviously, but you need data in order for you to trade. So yeah, you definitely need to look back in history. But when I say history, I mean this right here. I mean, just going all the way back. Like just zooming out of your charts and just going all the way back. Let me go to a different pair. I don't want to mess nothing up on this one. Let me go to Euro CAD. See what we can find on here. So this is what I mean by going back in history. Like, yeah, you need some type of data in order for you to gather evidence when trading. But like, look at this. Let me just go all the way back. I'm just scrolling back, just going back, just going back, just going back. I'm just gonna pick a random spot and see what I can find. All right, let's stop right here. It's just a random spot. Let me see what we have. I see we have identified level of resistance. So what I'm gonna do is grab my fib, take it from X all the way down here to A. Take it from support. I'm sorry, take it from my resistance, RES for resistance, all the way down here to this level of support, SUP to support. So guess what I have? I have my X leg for my resistance. I have my A leg for my support. So price pull back to that 38.2. Guess what I should be looking for? Now I'm looking for a cipher. So what I'm going to do is take my fib. I'm going to take it from A all the way back up to X, and I'm looking for a 1272 touch. I don't know if you're going to get it, but let's see. Boom. Wow, look at that. I swear, guys, this is not a magic trick. Look at that. We got the 1272 touch right there, right? Guess what we have identified? Our C leg. Now I have X, I have my A, I have B, I have C. Who can tell me in the chat what I should be looking for the completion of D? $78.6. See, Nakia, you paying attention. You just answered your own question. You just answered your own question. Yeah, I understand this isn't current price. In order for you all to see and identify these, you have to go back in history and turn your eye to know what you're looking for. I just went to a random spot on the chart and boom, you see how fast my eye picked this up? Like, seriously, you see how fast my eyes picked this up? Like, they're trained. They're like an assassin in the market. You know what an assassin is, right? Like a trained killer. That's what my eyes are in the market right now. I can see these things. So I'm going to take my fib from my A leg. I'm sorry, from my X leg all the way to my C leg. And everybody give Nakia a round of applause because she said that we enter at the 78.6. Would you look at that? I found the D. Y'all give Nakia, y'all show Nakia some love. She answered her own question. Yeah, go back in history and train your eye first. Train your eye and go back in history. You see what I just did, right? I just went to a random spot in the market. A random spot. And my eye just picked up on it. Guess what we have? We have X to A to B, B to C, C to D. Y'all, this is sexy. I'm not gonna lie. When you throw some harmonics on the chart, it makes everything look that much better. And guess what? My target one, I take my fib from my C to D. I take my fib from C to D. Target one is what? 38.2. Would you look at that? Price hit the 38.2. Harmonic patterns give you a lot of trading opportunities, and this is on a 15-minute chart. So on the lower time frame, they happen a lot more frequently. And I would go for the especially starting out, aim for target one. From our entry point to here, that's a damn. On a 15-minute chart, that's 60 pips right there that you would have made. 60 pips. How many pips they say keep a job? Hold on. I'm gonna do this for the gram. Hold on. Hey, everybody, get ready. I'm gonna say how many pips how many pips do they say keep the 9 to 5 away? And I want you all to comment, but not right now. Wait. All right, y'all get ready. How many pips how many pips do they say? How many pips keep the 9 to 5 away? All right, y'all ready? Let's go. How many pips keep the 9 to 5 away, guys? Drop it in the chat. 200. 200. I say 50. 50 pips a day keep the 9 to 5 away, right? 60. And look at this. We got how many pips on this trade? 50 a day. Go ahead and throw this on my Instagram. So yeah, gonna quit the job. 50 at a good lot size. 50 at a good lot size, yeah. So yeah, you gotta start training your eyes to see these different harmonic patterns. You know, like I say, you know, just aim for target one. Grab your pips and get out of there. You know, aim for target one. Grab your pips and get out of that thing, and you're good to go. So yeah, guys, I'm about to get off right now. That's my time. I hope y'all had fun with me tonight. We'll be back on tomorrow. Whatever trade setups that I see inside the market, I would definitely drop it in Pip Talk. Guys, if y'all have some type of value on this, share my Pip Talk link, all right? How long have you been trading? For about 3 years. Share my Pip Talk link, my Pip Talk channel with everybody. Let's pack up. Let's get like 100 people on this call like within the next 30 days. And I'll see you all tomorrow. All right, Rudy, later. All right, Denise, Alex, Keith, Michael. See everybody tomorrow. Marlandi, peace.